Hey, everybody. Hopefully everybody can hear me. I'm Mike Martosa, and with me is Matt Murphy. We're known as the M4. Of course, we got first names and last names all starting with M. When we work together, that's how we were kind of teased that way. Can everybody hear us? We got good audio. Matt, you hear me?
I can hear you, Mike. Feel free to chat if you can hear us. Let us know that you're out there. It'd be great.
Yeah. Feel free to use that chat window. There's an attendee chat, and there's also
or some smiley faces. I think you can, give us a thumbs up maybe.
There we go. There we go. All right. Well, this is actually our second time doing it. So the first one that we went through, we spent a good amount of time actually talking about the Bitcoin fundamentals. The blockchain fundamentals, talking about what a block is, how it chains together, what are some of the mechanisms that actually make it work, some of the cryptography involved and why it's in place and how it secures the network, distributed nodes, et cetera, et cetera. If you're looking for more of that, please let us know in the comments, and we'll certainly try to spend some time talking about it, especially for those who are new to the session. But for this session, based on the feedback we got last time, we had significant interest in doing some coverage around some of the weekly news or the things that have actually happened since our last meeting. We'll also talk about the Bitcoin price, the hike that happened this week, what may have driven it, and where those things might be looking at to go, in the next, couple of weeks towards the end of this year. And then we'll also talk about some of the other cryptos that are out there, call them altcoins, or even some of the other subs that are there. And then we'll also probably do some focus around exchanges, depending on your level of interest on wanting to know how you get money in, get the money out. So I think we'll kind of start there. Of course, you guys are on mute, at least for this time being, and then when we start getting to the question and answer, I'm going to promote everybody to presenters. Be good. Don't present anything crazy. But then we can all kind of start chatting amongst ourselves, and we can start answering some questions. All right. How come I can't advance my slides? That's no fun.
You're the techno guy, man. You gotta be on
that. That's what I'm thinking. Why is this happening? All I got is a damn Gina. We can't advance it. Let's see. Can I stop this and then restart it? Let's see. All right.
While you're figuring that out, I'll give some comments, some thoughts on the latest action since we last chatted. Obviously, we took a week off for Thanksgiving, but there was some pretty crazy action with the price going to, what was it, 11K. And, the pullback that we saw, it's interesting to me how these dips are getting smaller. And I guess it's somewhat, and the spikes are even a little less volatile too. Even though it's been extremely volatile lately, the huge spikes and the huge dips are smaller and smaller over time, and it seems to be stabilizing through all this craziness to a degree as well, which is very interesting to me.
Yeah, I would agree. Matt, I think earlier this month when CME was announced that they were going to start doing the trading on futures for Bitcoin, I think that also helped with some of the speculation that more institutional buyers were going to be coming in and seeding the market. So I think that helped. But also, too, today, or at least this week, NASDAQ has plans now to also do the same thing as CME and trading futures and derivatives also on their exchange for Bitcoin. So I think all those things as they start to come together just
totally agree. And I think today we might have been seeing some people selling the news as it finally became more widespread and known. But I think you're right. I think this is ultimately obviously driving a lot of the movement in Bitcoin now. So this is interesting. Mike's going to tell you about this chart here. This is the one you put together, right?
Yeah, I put this together a few weeks ago, and I started just looking at some of the timing aspects of the market, where there's incredible peaks, the dips, the time frames in which they're occurring, and where some forecasts may be. And what's in the yellow was a forecasted amount You can see what was before the yellow bar was where that value kind of sat, and you can see where the reds are the dips, where they actually occur, and then below that you'll see the number of days in which that dip period was supposed to happen. But I don't know. I started seeing some funky patterns. Like the first dip was for 33 days. The second dip was half that, around 12 days. And then it just started to fundamentally get smaller before it actually reached the same kind of height platform. And all of them seemed to be trading around 153 to 200% until we got to, what happened this week, pushing it just north of 11,000. But I think that's interesting. And this is where I think some of the concern is whether or not it's going to continue to be an astronaut and we're going to be eating ice cream and the whole like, or are we really kind of reaching that bubble point where we're going to retrace back until we get back to the floor? And, I'm not too sure. One of the things that we just were talking about is like some of the aspects that built up to this point. And this is another infographic that was released this week, which is pretty cool. It kind of highlights a lot of the fund volume aspects, which are indicated down in blue as it relates to ICO funding, and the amount of money that's kind of going into this technology itself, as well as certain events that occurred over the period of time. And look at this, it's just simply over a course of a year, everything actually compressing down to the last 4 months, more specifically. And you can see as things kind of collapse, similar to my chart, you can see the days up in the top starting to go in half, 10, 13, 17, 7, 2, which brings me to this. Now, if anybody's actually familiar with bubble charts, this is your classic format that most bubbles will actually take as it relates to a kind of change. And today we actually got some pretty strange indication. This is the 4-hour chart for Bitcoin. And if you look, it's starting to mirror very similar trend to what we saw with the bubble chart. So it could go one of two ways. It can either come back down to a baseline of about $5,000 per coin, or it's going to shoot up and go beyond the 11,000. So I don't know. Jury's still out for me as to where this top's going to be and where things are going to kind of more or less platform. But maybe now would be a good time.
And yeah, what's interesting about that chart too, I just want to comment, is it's very similar to the hype cycle chart as well, and obviously a lot of similarities in what's going on with the psychology there. But important to notice the difference because the chart that we were looking at there, the bubble chart, really having to do with the investment mindset, whereas the hype cycle is really about the adoption of the technology. And so when you think about it, if Mike, if you wouldn't mind jumping back to that, real quick, we may or may not be at kind of that peak where we might be seeing a major correction back down to the 5K level or not. But in terms of the technology adoption, I don't think anyone can argue that we are anywhere but still at the very very left side of that chart. So it'll still be interesting to see how things develop over the long term, regardless of kind of where we're headed in the short.
Yeah, I'll go back to it. I know there's a lot of people who've actually just joined us by phone, so they're not necessarily seeing what we've got actually on display, but it's simply just a simple poll. Where do you think it's going, up or down? Got a few people who have actually already voted, so if you're with us and online and you want to take an opportunity to vote, we can capture this here and we'll share it back to y'all. Just a fun little poll. Then Matt, we'll jump back to that slide so you can kind of explain a little bit better what you just talked about.
Perfect. Yeah, no worries. I didn't realize we had the vote thing up.
Yeah. There we go. All right. Everybody should start to see that now. Yeah, Matt, do you want this one or do you want the previous chart?
I said what I had to say about it. I mean, I was just, I think from where we might be on this particular chart, and it's actually, the previous one where you're showing the hype cycle, or the one that the bubble chart. But I think the hype cycle chart, which is very similar in kind of psychology, but I think from an actual technology adoption standpoint, we're nowhere near this public adoption period. So
Yeah, I think, Matt, what you're talking about is the innovation hype cycle, which takes a totally different arc and curve, where this one is more of that bubble kind of format, where I think a few of the indicators that we saw leading up to this was, the media attention, how many more people are talking about it. Some of the stories around your taxi cab folks are now starting to talk about it. When it starts to hit that mass market kind of aspect, or we at that prevalence for, a bubble. So I don't know if you guys were able to see the results of the poll, but everyone who voted, it was strongly swayed towards going up, with a few that are a little bit more pessimistic with it staying or moving down. So I think that's pretty interesting. I found another really cool site actually this week when I was putting some stuff together for y'all. There's a site called Brave New Coin, and they actually put together an infographic that breaks down all the various transactions, the amount of money going into it, the revenue, et cetera, for the entire blockchain, more specifically for Bitcoin. And they put these out weekly. And it's kind of interesting to see where we had for a rise this week and where we saw declines in some of those numbers. I don't know, man. What do you think? I think the miners' revenue in USD is pretty interesting. Same with the average price this week, which is unheard of. We hit 11.4, so that was not surprising. But everything else there, kind of cool. It'd be fun to track this.
Yeah, as the price has been going up, the amount in fiat that the miners are making has become staggering. but yeah, I think, the numbers are what they are, right? I mean, that's why we're all here anyway. The math of Bitcoin is making sense. But
yeah, 121 million is the new money supply. Interesting. All right, so some of the questions that we got last time is, how do you get into exchanges? What do you do when you're in the exchanges? Certain exchanges are very limited in the cryptos. You can actually go through and trade. Before we actually get to this point, let's just make sure this is relevant. We'll just put it out there and see if anybody's interested. Quick poll, where are you as it relates to moving money around? I want to start at the beginning. We can work you there. Or are you guys all using high-frequency trading algorithms and making 1% to 2% a day? Level 11s. We'll talk about it. Give everybody a quick chance. That way we can at least target the discussion as to where we want to be. I hope you all see that process. All right, cool. We got one person that's ready to talk about where to start. Some people who want to trade some pairs. And if you don't care, don't vote. Simple as that. We'll just touch on them briefly. And, if you've got more questions outside of what we cover here on this weekly chat, just reach out to me. Reach out to me or Matt, and we can probably spend 15 minutes with you guys on the phone and help you answer any questions. Wow, look at that. Split. Start me at 0. Trading pairs. Okay. All right, let's close this out. All right. So as it comes to moving money in, of course, you're going to be working with your local currency. Here in the States, we've got USD. I don't think we have any Canadians who joined us, but the most popular of choices is Coinbase, simply just due to the ease. You can download it from any one of the mobile stores, whether it be Android or that of iTunes. You set it up using your email address, and then you start connecting your either bank accounts through EFT, or you actually start, or ACH, or you can actually associate your check card, or you can even put in your credit card. And once those things are confirmed, there's additional forms of information that they're going to want to get from you. This is everything as to who you are, almost like buying a home. They want to know the meat. They want to know your name, your address, your age, your location, your social security number. They want to verify that you are a real person. There's some other bit of news we'll cover a little bit later as it relates to the IRS and how they want to start tracking those funds. So,
exactly. Of course, the reason they want to know this is because the government wants to know this, right?
Yeah, that whole KYC is really kind of started hurting a lot of the privacy aspects that were inherent to Bitcoin. But this is one way where they can actually track the money in, and once the money is in, Coinbase is able to say how much you've actually purchased, and when they gives you that coin. It sits within a wallet, and that wallet is an address, and then you send it somewhere else. You can send it to another exchange. You can send it to buy the most expensive pizza you'll ever eat, or purchase a car, the Maserati dealership in California, all sorts of things. But once it goes from Coinbase out, and if you're looking to increase your holdings, make money, you've got to find another way to bring it back in, and the most convenient way is the same account that you have with Coinbase that can be translated from, say, a cryptocurrency, a Bitcoin, back into USD. That's where they'll be sending the transaction records of what your gains are to the IRS, so you will be paying capital gains as you would with any other asset, or like a stock, very similar. So whatever your capital gains tax is for what your bracket is, that's what you will expect to pay if you've made the gains within a year, or what you'll get back if it's a loss, which you can also help account for yourself throughout the course of the year. All right, so I think Coinbase is one of the easiest to get into. Go ahead, Matt.
Yeah, I was just going to say, I think I might have been going the same place you were. Coinbase is one of the easiest because of the access that it provides, and you can use a credit card. At the same time, the cost of that is the fees do tend to be a little bit higher. If you use some of the other exchanges, you typically get access with lower fees, but again, it takes more know your customer stuff to get there, and sometimes doing the bank transfers will take longer. There's various other steps involved. One good thing is that one of the exchanges, GDAX, is associated with Coinbase. I'm not sure if they're the same company, owned by a parent company, or if they just have a partnership. But if you have an account on Coinbase, you can link it with that of GDAX. GDAX even allows you to place limit orders with no fees. So Coinbase is a great way to get that quick access, and then you can move everything over. The other, I might also mention some stuff that's not listed here. You can, if you find a Bitcoin ATM, you can get Bitcoin the fastest way that way, because you barely have to provide any sort of information whatsoever. Obviously, they are, you have to physically go there, or you can use a site called Local Bitcoins to find individuals. Actually, that one's on here as well. But both Local Bitcoins and the Bitcoin ATMs do tend to have the highest fees overall, and part of it is because of that kind of anonymity, more private option, as well as more limited availability.
Yeah, no, that's a good point. So what you guys are looking at are actually two top 10 lists, and they're very different. And they're different for a variety of reasons. The ones that it's on the right is more global. That's the other countries outside of the U.S. You can actually trade on margin. You can do some things that you just can't do as a U.S. citizen, simply due to some trading rules and laws. But you're right. So one thing that's really important as it relates to GDAX versus that of Coinbase. Coinbase, you're immediately purchasing your crypto, whether it be Litecoin, Ethereum, or Bitcoin, right there at that moment, at that price. Where still is you have to wait for that full transaction to clear if you're going through, say, ACH. The only time that it doesn't have to wait for that transaction period is if you've linked it to a credit card. So you're going to have fees on top of that. But with GDAX, you can actually transfer your money into the exchange as U.S. currency. You don't have to buy anything yet, but you can just move your money there, and then you can exchange it when you feel like you want to exchange it, and not feel like you're pushed to buying something right then and there in that need-to-have-it moment. Think of Coinbase as that McDonaldization, three-choice menu, super simple, make it easy, and GDAX gives you that ability to kind of buy when you're ready and at the points you are interested in as it relates to the market. So, the same process. Get your money in. Then when you want to extract it, you're going to just simply use what's called a withdrawal. And that withdrawal will actually hit a marker. It'll say, look, you're extracting your currency or your crypto at this price, at this amount, and that's what's going to be giving you your delta on gain or loss. That will be used for tax purposes. And I highly recommend that we be very careful on how this works. We'll get into it a little bit later, but you want to make sure that you're keeping good records in this way. If the audit man comes, you want to be able to show proof of what your expected holdings are.
Basically expecting
All right.
them at this point. So.
Yeah, we'll go through some more questions a little later. Let's see, what's we got for the next slide? We're almost there. Oh, yeah. I thought this was really interesting. So you remember last week when we were telling everybody that only 21 million coins are ever going to be mined. 21 million ever, at least for Bitcoin specifically. There's 3 other forks that happen. You might have heard a term called Bitcoin Cash. You might hear another one called Bitcoin Diamond. These are all forks of the same code base, which basically takes a copy of the database and gives everybody free money. It's just a new currency running down the same path. But Bitcoin Diamond, Matt, I just learned this week, that it's got 210 million coins.
Okay.
Versus just 21. Yeah. But what's interesting is we're only at about 16.7 million coins that have been mined to date. That's out of the 21 that'll be fully mined out. Expected around 2040. So we've got some years still left to go and some coins still yet to get produced through the mining efforts. But we're seeing some of those price increases throughout this entire period. Even John McAfee had to reassess his bet this week. I'm not going to get into the details, but if you're curious, you can look him up on Twitter to find out what he's more or less betting against. But to keep things short, he's expecting a single price of Bitcoin to be around 500,000 in about 3 years. So he's on target right now to see about trying to make that happen. There's even a GitHub site, I should send out the link, that tracks whether or not it's going to happen, if he's going to lose his bet or not. So he's at 100% on track for that. And I think that's kind of fun to kind of go against. But this chart right here is kind of indicates where certain things are actually going to fall apart. So out of the 21 million and the 16 million that are currently mined, this is the projection of the total coins that are going to be lost over that entire period. And that's just going to happen just simply through people losing wallets, losing their private keys, things getting locked by seizures and the like the early days of Silk Road. Certain wallets were actually confiscated, but they were confiscated and locked, and they didn't have the necessary keys to extract it, so they didn't have full capability to get access. It's very interesting that, out of the 21, we'll see an attrition of that total, just making each one of those coins that are still in circulation worth a little bit more.
Mike, if you wouldn't mind jumping back, I just want to comment on one of the icons. So original coins, I'm assuming this is probably referring to Satoshi's originally mined coins due to the number of them and whatnot. And I love the icon on the left. All of them are very straightforward. Exactly. It's like the secret genie is the one who let the genie out of the bottle. So yeah, that's cool stuff. Yeah.
And what Matt's saying is that there's a certain set number of coins that were actually pre-mined essentially by Satoshi, and those coins are sitting in a wallet. You go out there and see those addresses today, but they haven't moved. They haven't moved since the very beginning. And this has alluded to a lot of conspiracy that Satoshi Nakamoto, the person who actually developed the blockchain technology, is dead, or he doesn't want to actually move it because that may signal certain things within the economy that he is either a real person or that it may create some moves that may be detrimental to the entire environment.
Yeah, I mean, if he's smart enough to have created it and he really truly wants it to succeed, there's a chance he's realizing that. I mean, it takes momentum to get things going, and even implementing this, there's going to be coins mined at the beginning, and you're your own network. You're going to have all that wealth. And if he were to actually spend it, then this would benefit him, and everyone would see that instantly, and there's no way that it could ever become what it is. So I think I agree with the chart that it's likely that they will never move, that he is ensured that they will never be touched. And you see in the patterns what's interesting about them as well. Is one more note, sorry. Is that he took those coins and he broke them up into very, very small wallets, and it's not small by today's standards anymore, but that many coins, he wrote a program, I'm assuming a script to create addresses and break it up so that even these people who go around trying to brute force open wallets and come up with the keys, which is like trying to select atoms out of the universe. But if they were to ever get one, they wouldn't get the whole set, right? I mean, he's going through the efforts to make sure that this is not reachable coins.
Whoa, Matt, slow down. Started breaking the rules of physics. It's crazy. Yeah, no, I completely agree. But also, too, some of the conspiracy is that they don't want to know whether or not he exists or not exists, right? His anonymity is pretty important to this entire process, and he hasn't come forward yet, and I don't think he ever plans on wanting to. And if he starts moving his coins, then I think that starts to create some traceability for himself, which I think alludes to that point. All right. Splitzer, this guy, I think it was actually earlier this morning when he actually was on Bloomberg and saying that the currency has no value and it should actually be outlawed. I thought that was pretty interesting that he would say that. Not only that, but I think there's a few other people who are within this realm of class that would actually prefer that this happens because it keeps some of the old oligarchy and the like in place without moving things too far. We'll open this up to comments, of course, in the next few minutes, but I think it's interesting. We'll see a bunch of detractors, JP Morgan included, several others that are in the heads of a lot of the big banks are definitely not liking the momentum and the currency that's being created here, because it's certainly taking cash out of circulation for those people in those systems. But it's all about movement of money. All right, what else we got? Okay, so this is very important. Remember we brought up Coinbase earlier and the tax implications for it. So there was a lawsuit that was put against Coinbase in California Judicial Court requesting complete full access of all members of the community and the user base to provide basic and detailed transactions of all money going in since 2013. This is kind of a big deal, more so that a lot of other institutions don't have to necessarily abide by these, but I think this is one area where they're needing to put in some enforcement to be able to understand what the capital gains are. More so is the increase, or the rate in which Bitcoin has increased over the years has got to a substantial amount. They would like to actually recover some of that revenue. With some of the work that I've done for the IRS and with the like, I do know that they certainly don't like to go after like the $10,000 people who owe. They like to go after the big wallets so that they can extract the money from. And there are some new people with a lot new money that may not be aware of this, and they're definitely going to be hit. I forget what the report was. I should have pulled this up, but I think last year there was only 835 people who actually registered saying that they actually have Bitcoin, whether they bought or sold or had any transaction with it. And we know that that community is slightly larger than that. So with that, it's pretty interesting. What else? Oh, the small victory. I think that's kind of interesting. So Coinbase likes to say that they didn't win the opportunity to get everybody's account. In fact, what they got was the top 30%. And that 30% represents those who had over $20,000 of money going in or out of that exchange from 2013 to present. So that's a small holding. Coinbase says it's only 30% of the user base, so it's not the whole set. But we know that full enforcement will be in place moving forward at that point. What else we got? Oh, I'll keep this one short. We can bring this up in comments, but in Reddit, there was a thread. So remember last week when we were talking about the blockchain and how the blockchain is set up with a series of accounts, or what they call wallet addresses. In the early days, a lot of people were setting up wallet addresses and shifting around money or Bitcoin. And they were able to do it easily because it was at such a small nominal value. I think when Matt and I first started, I think we saw it around less than $20, and you could buy several. In fact, when we were mining early, we were mining 1 to 4 Bitcoin a day. And so when you had that and you wanted to actually understand how the process works, it wasn't hard to move that money around. In fact, most people actually gifted Bitcoins to others to encourage them to want to get involved. So in doing so, this is kind of like a little treasure hunt. This guy set up a process of taking a random word generator. So a lot of passwords that are cryptographically secured use random generation of characters, but for people to make it easy for themselves, they use words and phrases. And a lot of people weren't all that clever in going through and creating these cryptographic passwords, things that are easily guessed. And so they kind of created these little treasure hunts where you're able to go through and guess these public keys or these passwords and basically move wallets. And in doing so, he possibly found an exploit in early sets of code that would allow for known wallet addresses to be exposed. But this is something that predates a lot of the new currency sets today, but it was all about people setting bad passwords. Not too unlike people doing that today as it relates to any of their financial accounts. So this has turned into an interesting kind of treasure hunt. But anyway, we'll stop there. We'll into questions and answers. If there's anybody who would like to be a part of the conversation and be unmuted, send me a note in the chat. We'll pop you in and we can start having some conversation. If there's those who just want to listen in, you're more than welcome to do that too. Just give me a little note. Yeah, you're still with me, aren't you? Did I bore you? Are you sleeping?
I'm here, buddy. Yeah. I'm still trying. I was reading this. So I loved your explanation. I kind of get this letter now. I'm still trying to see what was happening to the individual here. It looks like they were. Was this from one of the hunts that you were talking about?
Yeah, let me see if I can actually. I'll just pull up the site. Guys, this might get quite nerdy for a second. Let's see if we can switch my displays. There we go. See if you guys can see this.
But yeah, guys, we'd love for and girls, we'd love for you to get in and hear what your thoughts are, and if anybody's following altcoins and want to give me some tips, I'd love to hear that too. Anything. But so is this the post?
Yeah, this is the post. So here's basically the meat of it. And then below follows the experiments, more or less practiced. Hey Ryan, while Matt's kind of digesting this, you just want to come on and just ask your questions? I'm sure other people would love to hear.
So these are about basically like math puzzles as well for people to solve and to try to claim the Bitcoin as reward. Yeah, that's cool. Yeah, and I remember when I first got involved, people had just stopped using the faucets, but you essentially could go to these websites and they called them Bitcoin faucets. You could literally just go, click on a button, enter your address. It would send you some Bitcoin. It would send you like a tenth of a Bitcoin. To think about that now, it's crazy.
Yeah.
Yeah.
Yeah, it's pretty crazy. All right, so Ryan's question was, as far as getting your feet wet with mining, what is the best rig? Best rig. All right, so best rig is kind of subjective based on what your goals are and what you're looking to do. So if your goals is to attain instant profitability and to make your profit help offset costs, then you want to be in a rig that's going to help generate currency or a value for you on a daily basis. So I would suggest you look at the Antminers S9s through Bitmain. They have the best horsepower at an efficiency rate. But there's also several new miners that are coming out. One set actually from Russia that looks to kind of beat China's actual Antminer in terms of efficiency. And what I mean by efficiency is that these things are basically mini bread ovens. They put out a lot of heat. I've got a few down in my garage, and when our furnace went out on the coldest days thus far, all I had to do was open my garage door, and we were comfortably 71 degrees in the 4,000 square foot house. So it was very easy to warm it up. So these things, they take in a lot of energy, about 1,300 watts a piece, and they put out a lot of heat. But in doing so, you're looking at about a third of a Bitcoin if you're going through to a third of a Bitcoin per one of those S9 miners today. And you're going to want to exchange based on the coin that's producing the highest revenue at the time. Like we mentioned last week, in the algorithm for each one of the blockchain components, there's a scalable difficulty that goes in place as people start to mine against a currency. And as that difficulty level goes up, meaning more people are mining it, it's going to be more difficult for you to stay at a consistent rate of return. So if it's getting more difficult and you were getting 0.03 Bitcoin at that point, you are now going to be getting 2 or 1 as that difficulty increases. When I say 0.03, I mean 0.003. Remember, Bitcoin breaks down into 8 decimal places. So that's what one of those S9s will typically generate for you in a day. What does that translate to after power? I don't know what your power costs are, but average, you're going to be anywhere from 5 to 12.5 cents. I think here in Ashburn, we're about 12.5 cents fully loaded. You're about $22 to $28 a day with just one machine. So at scale, right? So multiply that out, and that's what you're looking to get on a revenue basis, provided prices hold for everything else moving forward. Great question, Ryan. Thank you for that. Yeah, I see. Those faucets were early days, buddy. They don't exist anymore just simply because of the value of where they're at. But maybe.
Well, yeah. Now you're talking about the mining rigs, and I know, right? But now you're talking about the mining rigs, and I'm thinking about the early days too, and my first mining rig, and well, let me take a step back, because you were telling the story about.
Over. Matt, you there? Over. I'm so excited to hear your story. Hopefully we didn't lose him. We lost Matt. Matt, you're going to have to rejoin. Sorry, buddy. Yeah, I think what Matt was going back to is the early days when Matt and I actually got started. It was 2011, and one of our clients was actually AMD, and AMD had actually some of the better GPUs at the time, and they wanted us to actually use their GPUs to do some crowdsourcing exercises. And he also had a client, and the client actually introduced him to Bitcoin. We both worked for a crowdsourcing company called Topcoder that did crowdsourcing development, not only for design, but also for software application development. And in doing so, he said, hey, guys, heard of Bitcoin? Kind of like that drug dealer that popped out of the bushes. He's like, hey, guys, you heard about Bitcoin? But he simply introduced it to Matt and said, hey, what do we pay the community with the Bitcoin? And Matt was like, what the hell is this? He started looking into it. Keep in mind, it was a fraction of what it was worth today. It's in probably under the $10 range. And we just didn't see any value. The company we were with just didn't see it. We couldn't set up the accounting model to be able to work that in. Though it sounded like a clever idea, we just couldn't re-engage our entire business model to actually work that into our process. But Matt and I started to see the value, and we were highly interested. So we started doing some mining. And we were doing it with the early AMDs, the ATI Radiums and the like. These are the big guys.
Yeah, it was good stuff. Hey, sorry, guys.
You were saying?
Yes. Well, I was saying how you were mentioning how it gets more difficult to mine as the difficulty goes up, the difficulty of the problem. And so, as you're thinking about getting into buying your hardware, one of the things you might be thinking about is the future viability of that hardware. And while I can't obviously make any true predictions about the future, I can tell you how it had been compared to the past. And when we first got involved in this earlier on, $500 on a mining rig with some GPU cards, mining Bitcoin took about 3 months to pay off, and that was somewhat the best that you did at the time, the best hardware available. And then, and it was good. It continued to make Bitcoin after that. And today, getting, Antminer S9s is kind of the best you can do in as a hobbyist and getting it. It's at a much larger scale now. These are big machines putting out a lot of heat, as Mike said, but still takes about 3 months on today's numbers. So
yeah,
that has been the same, and I would almost equate it to trying to buy a computer in the 90s. You buy the latest and greatest, and it's expensive, and it does well for a couple of years, but then after 2 years or so, you probably need to get a newer model to keep up. That seems to be how it's been going. I don't know if it continue in that fashion with the power consumption that we're seeing, but it's still a pretty safe investment given the rate of return thus far.
Yeah, and where things kind of scale. So, Matt, what I just pulled up was What to Mine. It's one of the mining calculators that are out there that takes into account all the various algorithms that are used to mine. And the one that we're talking about specifically is called that SHA-256. And the coins or the blockchains that actually do the SHA-256 are several, actually. But the ones that are the most profit-driven, of course, Bitcoin Cash. On my Facebook feed, I did say Bitcoin Cash is the new king. It is the new king as it relates to the total rate of return over the last 4 months and the quick rise that it's actually gotten to be the place where it is. Matt and I have very philosophical differences between these two, which is great. And I think I love it. I love Matt, but I think Bitcoin Cash might still come in as a pretty strong dominant player. But what you're looking at here is, of course, the difficulty hash. This is the difficulty rating that the network sets for a coin to be released every 10 minutes. And this adjusts. This adjusts as more mining horsepower goes into the environment. As more people are mining this one currency, it's going to increase. So it doesn't release more coins than every 10 minutes. So when it does that, it gets harder. You get less in return. Or if you're mining solo and not in a pool, then you have less of a luck chance of actually being awarded those coins. Then as you work to the right, exchange rate, Bittrex is one of them. It's actually out of Las Vegas, believe it or not, and they just do crypto pairs, meaning you can't put USD into it. Once you have your Bitcoin, you can move your Bitcoin to that exchange and trade against all the other pairs that are out there. They typically have more than others in any other place. But as you move to the right, that's where you can start to see your market cap, your revenue versus your profit. It takes into account calculations on what your power consumption is going to be based on the wattage that you put up above and what your projected profitability is over a period of time. So yeah, at this point, it's really interesting. As you purchase this equipment, you're getting basically a payback in return at about 90 days, and it scales. So as you get more equipment, you operate it all at the same point, it all does that. Now, it's for this equipment more specifically, the SHA-256 or the S9 Antminers. So another side of this, Ryan, is that if you're interested in mining a smaller altcoin that may be early days before everybody else starts to get into it, then you start to look at what script is or the algorithm that it's actually being put against. Right here, you can see some of the top scripts. There's one called Script, which is actually Litecoin. We've got X11, which is actually a composite of 11 different algorithms. Quark, this uses CPUs to do mining, Qubit, and the like. There's even far more that are kind of centered underneath the GPU. Kryptonite, Equihash, the like. But it all depends on the coin you want to mine, which ones you feel might be the most profitable, or the ones that you want to build up a bank of coins before the big hit. So it all depends on really kind of what your goals are, relates to either long-term or short-term. Good question. Ashik, mining LTC. Yeah, I think Litecoin, which traditionally has been known as the silver within the crypto world to Bitcoin, is going to see its day. It's always technologically been able to improve itself faster than Bitcoin. It's been able to adjust to current trends in its technology footprint a little bit more easily. But it's always been, no offense to anybody, but that red-headed stepchild to Bitcoin in terms of its total price value. But with the price of the mining equipment that we're seeing now, the equivalent to the S9 for Antminers is called the L3. The L3 is a little bit more expensive, and the rate of return isn't nearly as good. But you're also hedging your bet in the sense that the coins that you're going to mine are going to be worth more in the future. And I have a sneaking suspicion that that may be the case. I'm still working towards whether I'm going to set up equipment to do that more efficiently, or if it's going to take up a large majority of what we're doing today.
I mean, Mike, we are where we are, I think, because of first mover, right? I mean, Bitcoin was the first, and that it has the adoption and the value that it does because of that. But that doesn't mean that it will always be the case. And I think you're right with regard to the algorithms used to mine. I mean, even Bitcoin can switch what its proof of work algorithm is potentially in the future. That's actually what the Bitcoin Gold fork was. But I think you're right. A lot of these other coins will have their day. Also, if they're overvalued today, we don't. It's hard to say that either. But I think there's a place for a lot of these.
Yeah, no, I think that's a good point. One of the other statistics that I read today, and I was going to actually pull that chart down, is there are over 300 crypto coins that have a market valuation over $1 million. So that just gives you kind of the breadth of what the size of the market is and what their values have been able to go to. So there is a chance, provided the marketing effort behind it, the community adoption, and what people kind of foresee its value to be as a technology, it has this potential to be a pop. And that's kind of why the fundamentals of understanding what the blockchain technology is and what it represents and how people can leverage it for their businesses is very important. It helps to start separating the wheat from the chaff and understanding what's fluff and what's not, litter shit as it relates to some of these currencies.
And if the question was about Litecoin specifically, I will say that one of the things that's exciting about it is it has the second mover advantage. It was one of the first altcoins, and its big distinguishing characteristic is it has its leader, Charlie Lee, who invented it and can kind of guide the developers and bring consensus. The weakness to Satoshi's introduction of Bitcoin, which may be necessary, but it's that it has this the decentralization is its weakness and its strength, right? But from a development standpoint, that's why it's able to adapt faster. And we saw segregated witness, which was to address a number of feature upgrades within the Bitcoin blockchain, but that was adopted on Litecoin and a number of other alts as well first. But Litecoin was the first major coin to adopt it, and I think you'll continue to see Litecoin and perhaps some others push additional changes in Bitcoin, but you'll start to see them differentiate more, and that's where we could start to see some of their values really take off too.
Yeah, and it's really interesting. Ashik, I think you're the one that asked us about Litecoin. So this is what the L3 produces in terms of its horsepower. It's 504 megahertz, not even in the terahertz class that the S9s are in, simply due to the chips, the amount of hardware in place. Not only that, but it's a different script. But as you notice, for that script algorithm, Litecoin isn't even listed. So it's not even reaching the good profitability for people to even mine. And even these numbers don't look that healthy. You're not going to really make it a profitable aspect. In fact, you're just going to be mining to hold those coins and hoping that they're going to be increasing in value at some later date. You're not going to be paying for your electrical costs in this way.
Hey, Mike, how is Peercoin doing from a profitability standpoint, and what type of miner does that use?
That's a good question. So Peercoin is part of the SHA-256 class. So that uses the exact same algorithm as Bitcoin, Bitcoin Cash. And looking at this list here, you can see it's, 6 in line? So it's not terrible, but it's just dropped below that 100% 3-day mark down here. You simply can't compete with Bitcoin being at the rate it's at, as well as the rate of what Bitcoin Cash can convert to Bitcoin in. Mm-hmm. That's why those two are pretty dominant. dominant today? All right, let's see. Ryan thinks that Bitcoin is the next Litecoin. Or is that your question? Well, it could be. It could be.
What was the question, Mike?
Yeah, the question is, Bitcoin the next Litecoin?
Bitcoin.
What coins are on a watch list? What coins will be the most effective with the Lightning app and the Atomic Flash? Ooh, now we're getting into some fun conversations. Atomic swaps and the like. All right, Bitcoin. I wonder if we can actually bring it up. I'm trying to remember what its SHA is or what its algo. We'll find it. Yeah, X11.
So I'd actually love if whoever asked that question, if you wouldn't mind joining and explain why Vertcoin would become the next Litecoin. I'd love to hear about it. I'm not sure. I'm trying to look it up right now. I haven't been. I'm not familiar.
Yeah,
with
Ryan.
it,
Just
so.
give me the nod. I'll make you a presenter, and we can open your mic. But you may also not be in the way of being able to get on there. Let's see if I can find it. I remember seeing it, and it's going to have its. Going to be popping. I think one of the major components of what Vertcoin represented and what Matt was talking about earlier, coming to what's called proof of work and proof of stake. So Vertcoin is one of the currencies that's considered an ASIC resistant currency. So
yes.
Backing up a little bit, as it relates to cryptocurrencies and the race to get the miners out there to generate as many Bitcoins as possible for individuals, there's a chip similar to a GPU that's the graphics card in your computer, but there's a chip that's manufactured specifically for an application or a process, and this is called an ASIC. ASIC stands for Application-Specific Integrated Circuit. So that's all they do. They only do the work for these algorithms. But you're able to manufacture them at a cheaper rate than that of an individual graphics card. Plus, you can make them stronger in terms of the horsepower they can deliver. So what we saw in the community as it relates to Bitcoin is as these ASICs got released into the ecosystem and we were able to mine more efficiently and faster, there was a strong increase in the difficulty, but there was also a strong settling of individuals who had large farming operations. And remember, some of the key points around decentralization and the distributed nodes is to have as big of a network and different nodes as possible, so you can ensure that no one is trying to malform any of the data or change history as it relates to the ledger. So this is some of the concern in the early days about making sure that these things were ASIC resistant. And this is what Bitcoin represents. And does it have a future? Yes, it does. And I think Bitcoin is going to exist for the casual gamer who would like to mine, but can't compete at the rate the larger currencies are currently at as it relates to the difficulty setting to make it profitable. Bitcoin will make it profitable for the casual miner to earn some coin at a decent rate because it doesn't involve the ASICs. Hopefully.
And I think that's a great answer in my opinion from a mining standpoint. I was curious to learn that. I think from an economic standpoint, in the crypto world, Vertcoin, given what I've learned about it, I think it would to a degree. I'll have to look into it more, but become like the new Litecoin or capture some of that market. Given that Litecoin, that was one of its main features, right? It hadn't been. There weren't these hardware. There wasn't this hardware out there that could mine it incredibly fast. Now there is, and so to have a resistance against that is definitely a feature from a currency standpoint. And so I think it'll capture a portion of that market. How long it'll last, I don't know, because how resistant is it? I don't. I'll have to take a look at that. I'm sure it's got some credibility if it's making a fuss, but how resistant can you make it is the question.
Yeah, and I think
because if it's something that is proof
of
work, still you can still calculate it. Go ahead, Mike.
It's true. Yeah, I was going to say is that it would only be really appealing and super tasty to individuals who actually want to philosophically keep the nodes as distributed as possible. They don't want any of the big mining groups to come in and start cornering off a large section of the horsepower and collecting all the coins, per se. But it only has that value until one of the larger coins actually basically moves to that exact same kind of proof of stake. Now, it's possible for Bitcoin Cash, or any of these to implement that technology as a fundamental change in their technology set. So it doesn't preclude them from actually doing any of that work. But I will say that some of the bigger proponents of, say, Bitcoin Cash, recent forks as of August, has a large stake in producing ASICs mining hardware. So I don't think he's also going to want to cap off his potential earning by basically cutting his business off at the legs by implementing a proof of stake work. But I think this does bring up a very interesting point. So if there was only one Bitcoin and you had all these miners who are now producing more equipment, spending more money on this mining effort, and the difficulty is getting so high, we're using so much power, and the smaller individual, the individual that's mining from his gaming computer, just simply cannot compete at that point. It just turned completely into a commercialized operation. That may change some bias. But what's interesting is that the fork actually created more coins to run in parallel that can now help offset and allow for, say, Bitmain, who's creating these S9s, to continue to create more S9s, because now the power has been divided by, say, two cryptocurrencies. And what you'll find is that this is a pretty interesting site. What is it called? It was something about LOL, Matt. Was the one that had the mining power between the two? Oh, fork.lol.
Fork.lol. Yeah.
Yeah. So this is pretty interesting, right? So these are the two larger SHA-256 cryptocurrencies that are in place today. And what this does is this tracks the difficulty as well as the mining effort put forth to both of those cryptocurrencies. And what you'll find is that it's going to sway between not only BTC but BCH. But in effect, splitting or forking these coins, split's the wrong word, when you forked this coin, this application set, and created this new cryptocurrency, it was able to divide the network and divide the computing power necessary for him to continue to drive his business and sales of these S9s, because it's going to require twice as much horsepower to keep both networks going. So very self-serving, first and foremost, which I think is very clever, but also, two, it allows for more people to get involved in mine and continue to make a profit as long as the prices hold. I'll end with that. I don't know what I can say.
Sounds good to me.
I don't know. What else we got? All right, Ashik. This is hard to answer, but what do you think could be the next coin to join Coinbase? Well, I think that's very easy, actually. Bitcoin Cash is going to be released for them come January. So out of the three that are in place today, you got Bitcoin, you got Litecoin, you got Ethereum. The next one they're going to be adding is, of course, Bitcoin Cash. That is going to be a very important date, and that's also going to be a very important movement for that cryptocurrency come January, for two reasons. The first, of course, being that everybody's familiar with Bitcoin, and Coinbase seems to be the gateway for them to get involved in cryptocurrencies. In fact, over 300,000 people signed up for that service just this month. So they've got a significant increase of individuals who want to participate. Doesn't mean that there's a significant amount of money that's being put into the crypto market. Even if it was $20 for 300,000, not insignificant, but it's not monumental. But what's interesting is those who actually have currency within that platform now have an opportunity to buy Bitcoin Cash, where they would have to move it off exchange to another exchange that actually is hosting that currency to be able to make that purchase. So we're going to see an increase of individuals who are wanting to hold Bitcoin Cash, and the familiarity with it is actually going to improve its value over time. More importantly, which is going to be really interesting, is I think within the Asian markets, they seem to kind of like, more so in Korea, the idea of Bitcoin Cash. They seem to like that idea. And if they continue to pull hard on that crypto outside of the other ones that are in the top 4, then they maybe want to kind of corner that market, but also might drive up that value as well. Hopefully that answers your question for the next one for Coinbase. Cool. All right, guys. If there's any other questions or anybody else wants to join, I could stay on for a few more minutes. Matt, I don't know what your time frame is, but hopefully this has been helpful.
I certainly can. I don't want to keep anyone, in suspense and feeling like they're going to miss out or something. We could certainly cover more next time. I'd love to have our Bitcoin Cash discussion at some point as well. Bitcoin Cash, Bitcoin. I'll throw my Bitcoin Gold in the ring as well. But yeah.
Hey, I'll call Roger. We'll just have Roger on. We'll just make Roger.
That would be fantastic.
We'll see what we can do. It'll be kind of fun. All right. Matt, anything else you want to add?
No. Appreciate everyone joining.
Before we let everybody go, here, I want to get this poll out. So I know this is this time and day may be hard for others, but to take a second and let me know if there's another day each and every week that's better for you guys to attend. Quickly vote for those who can, and we'll just take this into account and how we can adjust each and every week so we can make room and improve the conversations, and whether you like it or not, our opinions, etc. So I'll leave this up for a second. You guys actually have an opportunity to vote for your day. Oh, cool. I like Thursday. So does somebody else. Wednesday is also a good contender. All right, 10 more seconds. Actually, 5 more seconds. 3 seconds. All right. Looks like Thursday's still it. So we'll keep it as Thursday. So one last poll, similar to what you guys did when you guys registered, is helping Matt and I know what we need to cover next week. You can guys stay informed. Hopefully this makes sense. So blockchain fundamentals, the non-technical, think about it as like a large OV1 or an overview of what the ecosystem looks like, the parts that move, the various transactional things, not into any of the ones and zeros that really kind of make all that work. Then the blockchain technicals, boy, that's when we get really, really spicy. Matt and I can go deep in some of the technicals that really make the underpinnings of these. We'll spend some time there. We can highlight news and, of course, the things that actually happen throughout the course of the week. Recap that for you guys. Mining, sort of what we just discussed today. Details within there. How do you actually evaluate what equipment you use, what kind of software you use, how big of a mining operation you want, how do you deal with cooling, all those various things we can get into, and then, of course, Firecast and predictions. One of these days, Josh will join us. Get that fucked. All right, cool.
He's been working on it.
We'll, yeah. A few more seconds, and we'll let that be. All right, guys. Well, we appreciate it. Thank you so much for joining the call. We'll make this available for those who weren't actually on the call, and hopefully we can do this moving forward. That way, if you guys miss a week, you won't lose out on the conversation, and you can continue to participate. So that being what it is, thanks, Matt, for joining. Appreciate your help, and thank you, everybody else, for being here.
Thank you.
Hi, Matt.